Hey there, TaxBots. I'm Justin Spicer from the Ohio State Legal Services Association, and I'm here with Michael Edwards, staff attorney with the Low Income Taxpayer Clinic at the Legal Aid Society of Columbus, and Luke Minek, senior attorney with the Low Income Taxpayer Clinic of Southeastern Ohio Legal Services. Today, we're going to be talking about common expenses that are tax deductible for self-employed employees who travel a lot. Feel free to leave a comment or a question, and we'll answer whatever we can. Michael, to kick off today's topic, can you give our viewers a quick overview of what we're going to be talking about?
Sure. We are going to talk about the rules that self-employed folks need to follow so that common travel expenses, things like transportation, lodging, and meals, are tax deductible, meaning you subtract the expense from the amount of income you need to pay income taxes on. In the tax world, travel expenses are the normal expenses involved with traveling away from the taxpayer's home for work. These kinds of expenses are what the IRS calls ordinary and necessary expenses. Ordinary expenses are costs that are common and accepted in the taxpayer's area of business, and a necessary expense is an expense that is helpful and appropriate for your business. An expense doesn't have to be required to be necessary.
So the IRS says travel expenses have to be expenses made for work that are done away from home. Luke, how does the IRS define a taxpayer's home?
So the IRS defines a taxpayer's home as the taxpayer's regular place of business, regardless of where the taxpayer actually lives. It includes the entire city or general area where the taxpayer's business or work is located. So to give you an example, the taxpayer lives with his family in Columbus, Ohio, but works in Cleveland, where the taxpayer stays in a hotel. The taxpayer returns to Columbus every weekend. The IRS would consider Cleveland as the taxpayer's home because of the length of time the taxpayer spends in Cleveland. If the taxpayer does not have a regular place of business, then the taxpayer's actual home could be their tax home. There are some other factors that the IRS considers, but that's a little more complicated than we have time for today.
All right, Michael, let's talk about transportation expenses. What sort of expenses are tax deductible?
For transportation expenses, the taxpayer can deduct the cost of travel by airplane, train, bus, or car between their tax home and their business destination. Using Luke's example above, if the taxpayer flies to a business conference in Los Angeles, then the taxpayer can deduct the cost of the plane ticket to and from Cleveland and Los Angeles. As another example, let's say this taxpayer doesn't have a regular place of business. Instead, the taxpayer's main home in Columbus, Ohio, is their tax home. If the taxpayer drives from Columbus to Ann Arbor, Michigan for a conference, the taxpayer can deduct the actual expense like gas, maintenance, etc., or use the standard mileage rate, which is currently 65.5 cents per mile for the trip. Just like in the drive up from Columbus, if the taxpayer uses their car while in Ann Arbor for business purposes, they can also deduct the actual expense or the standard mileage rate. For more information about the mileage deduction, check out our Facebook Live video from November 4th, 2022.
Always love a callback to a previous session. Luke, what counts as a lodging expense, Luke?
So first off, let's talk about what we mean by lodging. So lodging means a place like a hotel or a motel where a person lives or stays temporarily. So for the cost of lodging to be tax deductible, the taxpayer has to be traveling away from their tax home for their business, and the overnight stay needs to be necessary. But that doesn't mean you can stay at the fanciest hotel you can find and deduct the expense. So to continue our last example, let's say the taxpayer from Ohio is traveling to Los Angeles for a business conference. The taxpayer is staying at a hotel. Since the taxpayers are traveling away from their tax home of Cleveland and the taxpayer needs to stay somewhere overnight, the expense would probably qualify as a lodging expense. But if the taxpayer chooses to stay at the Ritz-Carlton, that would not likely qualify because it's far more expensive than is necessary.
Are meals tax deductible as well, Michael?
Yes, you can deduct the cost of meals while traveling away from your tax home on business. The taxpayer can figure out the cost of their meals using either the meal's actual cost or the standard meal allowance or the per diem rate, which Luke will talk about in a moment. If the taxpayer chooses to deduct their actual cost, the IRS limits the deduction to 50% of what they paid. To give you an example, while the taxpayer is in Los Angeles for a business conference, let's say the taxpayer eats at a restaurant. The total for the food, taxes, and tip is $200. In this case, the taxpayer can only deduct $100 for the business meal.
So Luke, what's the standard meal allowance that Michael talked about?
So if the taxpayer chooses to use the standard meal allowance, it lets the taxpayer use a set amount for their daily meals and minor expenses. Every year, the federal government updates the standard meal allowance, and it also updates it for depending on which state or city that you're in. So using our example of the taxpayer traveling to Los Angeles for work, the standard meal allowance total is $74 per day. And this breaks down to $17 for breakfast, $18 for lunch, $34 for dinner, and $5 for other minor expenses like tips for a taxi driver or hotel staff. Some taxpayers decide to use the standard meal allowance because if you use the actual cost, you have to keep records of the actual cost, meaning your receipts. But with the standard meal allowance, you just have to show the time, place, and purpose of the travel. And you can find more about the standard meal allowance rates at www.gsa.gov/per diem rates.
Michael, if a taxpayer is meeting a client for a business lunch, can the taxpayer claim this as a business expense?
Yes, probably. But the 50% limit we talked about earlier would still apply if you're calculating the actual expense. If the taxpayer used a standard meal allowance, the taxpayer would multiply the allowance for one person, which again is $18 using our Los Angeles example, by however many people are at the business lunch.
Okay, so Luke, if the taxpayer's significant other or family member travels with the taxpayer on a business trip, can the taxpayer deduct their expenses, the expenses of the family member or significant other, as a business expense?
So generally, no. Also, if the cost of lodging is higher because your significant other or family member is traveling, you can only deduct your actual cost. So using our Los Angeles example, if the cost of the room for the taxpayer and his wife is $250, but the cost of the room for just the taxpayer is $150, the taxpayer can only deduct the $150 cost.
Okay, great. Excellent information as always, guys. Thanks very much. And thanks for everyone for tuning in. Join us next time when we're going to talk about building address records. We'll see you next time.